Hey guys, and welcome to another video. My name is Kenny. I'm an analyst here at Trade Tips. Today we're going to be talking about the Bollinger Bands and how we can use this indicator to look for overextended moves. So in the last video we talked about the moving averages, and today we're going to just turn them off just so we can look at just the Bollinger Bands by themselves. In order to add another indicator, remember we go on the top left over here, click on the FX button. We're going to type in either BB or Bollinger Bands, and if you can look right here, you can just click on that and they'll start to pull them up right away. And what this is it defines a range. So what Bollinger Bands are exactly is that they are 2 standard deviations away from the 20 moving average. So if I were to go into the settings right here and I click on the cog and we click on basis, that actually shows us the 20-day moving average. Now, when used in conjunction with our own moving averages, we can go ahead and just turn this off because it's already built in for us. But today, since we are talking about just the Bollinger Bands by itself, we're going to go ahead and leave it on, but that's what that red line represents. Now, when we talk about 2 standard deviations, well, why are they important? Well, if we look at a normal distribution curve, what that means is that if I take 2 standard deviations away from the middle, which is here, go -2 on here and then 2 on this side, what this represents is 95% of where the price should be in probability terms. And so if most of the price is supposed to stay in this area, then we can expect that the prices that are outside of this area, either below the price or above the price, they're going to be what we call the outliers. So if we look at here, if we point out to these areas in here, we find that those points and those points are the outliers. And so if we look on our chart, we can see that we do have one of those outliers here. So on March 4, we found that the SPY actually dipped well below the Bollinger Bands, and you can see that in reaction to it, the price is going to correct itself and try to go back within the Bollinger Bands. And in this case, if you wanted to do a 2-day trade where you bought it outside of the Bollinger Bands at 373 and you came back to 380, that for you would have been a 2% trade or $7 move for the SPY. Now, we can even use this indicator in high volatility names, especially with what happened in GameStop. And if we look at GameStop, you can find that when we had the price in the 300s up to even the 400 area, what you'll find is that it was well above the Bollinger Band area. So if you wanted to get a put and you said, hey, you know what, I at least want to get a move that goes at least from, if you went short on the 400s and you're trying to say, hey, I want to bet it's going to go down back here in the 300s, that could have been a $100 trade for you, for example. Of course, a little bit risky. Things that are overextended can stay overextended even for a couple of days. So this isn't, again, another end-all be-all kind of indicator for us, but it does give us some important information to see whether or not a move is overextended. So if we go ahead and look at another past volatile name like AMC, we can see another overextended move that came from all the way from $5 into the $20 range. Had you even just got it in here in the 16s to go short, you still would have made money as it went from 16 all the way down to even $7 or $6. And so that could have been another 2 or 3 day trade for you if you wanted to use the Bollinger Bands in such a way. Now again, you can also note that here, when we had the Bollinger Bands, we could have seen that we had this really red day in Tesla. And in this case, you would have been like, okay, maybe I can make a 1 or 2 day trade, trying to go long on Tesla. But what you'll find is that the Bollinger Bands shouldn't just be used by themselves, because just by themselves, you would have gotten into a losing trade, right? If you got in at, this at 713, the only possible way you could have probably made money on this trade is if you went ahead and got it at sold it at 738. But when combined with other indicators like our moving average indicator, you'll find that on this red day, it was actually a break of the 50-day moving average that led us down to the 100, in which case, when you combine two indicators together, like a 100-day moving average dip buy with maybe an overextended Bollinger Band move, that's how you can find more of those high probability trades when you try to combine indicators together. So again, by themselves, we can't just use this to give us a complete picture, because again, you can put yourself in situations where maybe if you try to enter in a trade and then it goes sideways, well, that doesn't really help you much. So you want to make sure that you combine different indicators together to make a complete picture as to why you want to get into a trade. And in general, the more signals that you get that kind of coincide with each other, for example, if you have a 100-day moving average buy plus you're seeing an overextended Bollinger Band move, the more signals that you have in your favor, that's how you can define a good high probability trade for you. Again, we don't ever want to look for sideways days like this. In that case, we call those like a no man's land kind of trade, where at this point it couldn't go anywhere, and at this point it wanted to go sideways. And especially when you're playing with options, you don't want to get caught in a sideways move, as time decay can kill you significantly in our premium. So we want to make sure that we only find high probability plays for you guys. So with that being said, we don't actually use the Bollinger Band too often. What they'll find is, an overextended move can stay overextended for a long time, but it is good to add to our tool belt in case we wanted to turn them on and see if we're actually correct, and use it as confirmation as opposed to using it strictly to trade from. Okay, hope that makes sense for you guys. Again, if you have any questions, let us know, and we'll see you guys in the next video.